Welcome to TradeTheMBI.com. This is John, the reports for the 10th. Well, we continued along. We saw that we had the short-term buyers easing off right as we reached the peak right here, letting it absorb some. We're seeing just a slight increase of short. Yes, we have major activity here in Europe with summer thunder. Well, not quite summer, but almost. A few more days. So the precursor to summer thunderstorms. So cute. Anyway, this is kind of the thunder and lightning bolts that we're getting from the market here with just a little bit of softness. And again, while you do this devaluation, there is no impetus to drive price to unreasonable levels, simply because the economic numbers are just wretched. We should expect to see some more tipbacks to ABMs, even violating them, because I think we're going to be filling these positive extremes before there's any significant continuation going forward. And you still have not as much civil unrest, but it's the economic damage that it's doing that's going to be more significant, because if it reduces the consumer spending and that from the trend line that it started once the lockdowns were starting to end, that's really going to be the impact to it. And then also, of course, you have all the people who ignored their social distancing, and so will you get an epidemic wave that is able to overwhelm hospitals as opposed to just a normal rise? Because you should see just a continual steady rise in cases, because there's no way to avoid the virus. It's just not going to happen. The question was always whether or not you could just keep it into a range that allowed the healthcare system to accommodate it without being overwhelmed to a point of ceasing to function. That said, from an NQ standpoint, it was already a little bit stronger in general. We were literally not having the same overbought conditions that we see from the S&P from a DOC standpoint, and certainly with the full reset of the steel, it's just in a soft zone right now. Still rising shakeout through this one. So again, and this is the whole reality of it, was the NASDAQ has been leading it, and that's just because of the tech situation and its ability to continue to push forward as far as what people need, because everyone's ordering online, those kinds of things, and that's just the reality of it. And again, the devaluation of the dollar, trying to support the euro to help exports and keep things going. Plus, this prevents the capital flight that was already starting to begin from Europe, so this will help sustain people wanting to stay within the euro, because they'll lose too much from a value standpoint going into dollars and trying to invest there, plus with the chaos that scares more people than practically need to be. But that's the entire desired effect of terror campaigns. So from an oil standpoint, gonna hold off. It'll probably keep oil from rising a little bit. That may be just enough to stem it from its perpetual rise. And certainly, if you start seeing police forces defunded, you'll definitely see the market suffer a lot more, because then it becomes social unrest, and leading into an election, it's going to be a wild summer. So it's going to be super exciting, not necessarily from a good standpoint as far as health and well-being, but definitely going to be dynamic. And of course, gold, no shock here that it was going to rebound and make its turn. It's just a question now how fast it breaks out from this range into the new highs. This shouldn't take that long. It should be happening fairly soon. So we had the big buildup, and of course, previous algo levels already marked. And what do? We come right to them once it's breached. There's just nothing there to support it, and right to the next level. And then we just kind of based. It was just sort of blah. But after a while, it started to build up, and then we got the final dips here that really were still off the same kind of weakness. For me, it was just that 31.93. It's like above, okay, yeah, you got to be long biased. In this particular case, the algo from the pink bar had recognized the orange candle, which was an accumulation setup. They just hadn't acquired enough, and then finally, when they got enough to squeeze everybody, boom, takes off, breaks back up towards the reasonable previous high range, and of course hitting the secondary algo, which we had at the 32.18 right there, caps right off that, fills back in a little bit, which is nice because it filled in good chunk of all of the positive extremes that were being created, and then retested them on the lows right before the pre-market skyrocket, and then fill back. So did it all. You close out shorts going up, and you take out long stops if you can. That would particularly be if we break a little bit lower than this, which was what I would expect at this particular time, and that would run the gambit of everybody, and all the weak hands would be dissolved, and only those with committed convictions will be able to ride it, or those who are actually in front of their screens. Which is the ideal situation. So it's just really good action, excellent wave. I think we're seeing it very clearly, and we're just going to keep playing with it. So I think it's all good. As always, though, I will update you if something unique is there, but this stuff is pretty straightforward. Trade well.